so I'm not a market chartist. And then he explained his theory, and you should visit MTA site and take the affiliate status and see if you can find this slideshow. It's a very interesting slideshow that he made. And then we move on to Tony Plummer. Now Tony Plummer from London is also a market guru, and he was the one who also made an attempt to connect various historical ideas on time. He said that there was an order in time, and he drew this idealized time structure. He said time had this pattern, and the pattern of time was made of 3 cycles, and their time started at 0%. Time starts today, and 17% of time gets over, 33% of time gets over, this is half of the time, and so on. He explained that this is the idealized time structure. And then Tony Plummer, one of the things he highlighted was that there was an order in all this cycle history which was discussed by gurus, and that was that the kitchen cycle and the juggler cycle and the Brian-Berry cycle and the straws and off cycle were connected with a factor of 3. They were all 3.3 into 3, 10 into 3, 30 into 3. So he saw this order, that there was an order, and he tried to explain in his book why Kandratev cycle may work sometime and may not work sometime, because the larger order of the 3 factor makes Kandratev valid sometime, and sometime it does not work. And this is also which he talked about, where he said that if time had a pattern, the economic cycle was divided into 3 parts, or an economic trend was divided into 3 parts, which was base cycle, trend cycle, and terminal cycle, and then the cycle process starts again. So the whole idea of seeing a pattern in markets was where all this history of research brings us, trying to understand the pattern of time. And the best part was that time cycles being everywhere, sometimes were similar cycles, sometimes were inverse cycles. Now this is a cycle of religion and credit, and which so according to which people start believing in God as the credit cycle falls. When banking crisis is there, or when the deposits in the bank starts to decrease in terms of growth rate, people start going or believing more in God and religion and church and temples. And as the credit or the prosperity increases, that's the time the number of people going to church or religion, believers or temple, they start falling. So there has been also studies of inverse cyclicality and patterns which are seen in social behavior along with markets and economies. Here we have the Robert Prechter socioeconomic structure, where he's saying that the markets do not really work on news, but markets work on social mood. So he said because of social mood, there is it leads to an action, and which leads to an influence on the market, and which is why the economic cycle confirms, which creates news, and which reinforces the social mood. So he was trying to explain that how social mood is the driver for markets. So we have some thinkers saying that sunspots are affecting markets. We have some thinkers saying that social moods affect markets, and it is cyclically. They illustrate it cyclically. We have some thinkers who talk about a specific time cycle, 3-year cycle, 10-year cycle, and so we have various kind of thinkers who kept on seeing and observing time cyclicality. And this is the cyclicality which is seen in volatility. One may say that volatility which I see in a day is not cyclical. There is a time of a day which is going to be more volatile cyclically than another time of the day. If you look at the local markets, you will see that the local markets are very sideways and very sleepy on Friday, and Fridays are very lackluster days, and you can understand, and you can easily see Friday to Friday cycle. Every Friday the volatility drops, and then when you start Monday, the volatility rises. So these patterns of volatility or cyclicality can be seen in any market. There is an expiration volatility, which my Indian friends would agree that there is some volatile expirations which have been seen in India. So I do not know whether the pattern is can be really plotted, but there could be a volatility pattern from expiration to expiration that could be studied. And then we have this the assets, the cash assets, which we have as a percentage of the portfolio, percentage of cash in a portfolio. Now, as a group of experts, as a group of fund managers, it has been seen that most of them, or a majority of them, are least invested at the bottom, and they are most invested at the top. And this also is how the cash as a percentage of portfolio can also be cyclical. It can move up, it can move down, and it can also show an order how the complacency or how the overconfidence of fund managers, so as a group of experts. Then we are talking about now more subjective cyclicality. We are coming from a structured, quantified ideas to more social ideas. Michael Porter talks about, like, the competitiveness. Competitiveness is not about some secular competitiveness. Competitiveness is an idea which can also be proven to be cyclical. Top ranking comparative countries. We studied the World Economic Forum 2010 competitiveness ranking and 2009 rankings. And when we studied the 2009 rankings, we took the top 10 competitive ranked countries in the survey, and we took the top 10 from the 50 countries, and then we studied their stock performance. How did their stock market behave? So we realized that the last 10 of the 50 companies outperformed the top 10 competitive ranked countries in the top 50. So one could see that in 2009 what competitiveness was established behaved in a different way when it was really tested to real stock prices. So there was also cyclicality between the top ranked countries underperforming and the worst ranked countries outperforming. So the cyclicality in competitiveness was also there. Then we are talking about entrepreneurship, risk taking. Risk taking and business generation and business ideas is also cyclical. There is a time a society wants to take risk. There is a time a society does not want to take risk. There is a time of entrepreneurship. There is always a creative destruction. That is why the David Goliath story will always happen, because there's always a small business idea which will become large enough, and there's a small business with a new idea which will become a major social networking idea. So there is always new ideas which keep coming, and there is a cycle of risk taking because of creative destruction that can be established, that can be seen, that creative destruction has always been happening. And that is why cycles can also be seen in entrepreneurship. And rather, entrepreneurs are the one who should be studying market cycles and economic cycles and train themselves to know when to take risk. Then we have the failure of states. Now, failure of states might have been a very strange idea 10 years back. Come on, how can a state fail? You should look at the problems that are happening in Greece, and you should know that how uh, the debt problem can bring a large state down, and how it caused the fall of many empires, Ottoman Empire, Turkish Empire, Spanish Empire, many of them, because of large sizes and debt problem, failed. And this again is a very cyclical activity, and it has been clearly connected with debt, and it keeps happening again and again in a different form, but it does happen. Then we have the 80-20 principle, which says that the 80%, 20%, or the big ideas are less in number. There are few ideas that change the world, or you can talk about like earthquakes, and you can talk about the animal kingdom, and you will see that the larger the size, lesser the number; the smaller the size, the larger the number. So the cyclicality from 20 to 80 is also pretty much established, and the need to focus on strategy, to concentrate on the top winning trades. This also is a cyclical idea, because you have, as a trader, to identify what are your best skill sets, and you will realize that your 20% winner comes after a certain time, or your 80% losers happen in this time. So you can also establish an order of trading strategy, and where you can see that how the winner cyclicality happens and repeats. So that's the 80-20-20 rule, which is also the Wilfredo Pareto rule, Pareto curve, which talks about exponentiality, which we will be talking later. This is the inflation cycles. Because of the fact that human beings are poor cycle researchers, or disbelieving in time cycles, they still believe um, more in the external factors that may change things, that we have not really studied the inflation cycles. There are 60 years of inflation cycles, and if you study them, you realize that whether we are in a rising inflation time or we are in a falling inflation time. Then we are speaking about gold crisis. Now, gold might just look like a crisis asset, or might look like just um, uh, some metal which is can replace currencies. But if you look from 2000 backwards, 2000 was the low in gold. If you go 30 years back, you see 1970. If you go another 30 years back, you go to 1930s. If you go another 30 years back, you go to 1902, and so on. If you keep going back, you'll see that gold has always hit a crisis every 30 years. Every 30 years, it hit a crisis. There was a gold panic, gold sell-off, and this was in 1869, and this came 30 years before 1902, which was again a gold sell-off. And 1869, this person is jumping with gold and making money at gold, and then losing the money at gold. Gold moved from 160 to 130, and it clearly shows how the 30-year cyclicality has prevailed on gold. So some assets which we give so much importance to, and we give so much fundamental information to, have been so well ordered that 2000 was it was very visible in terms of 30-year cycle. you know so 1970 plus 30, 2000 plus 30 to 2030. So the next crisis of gold should come at 2030, which means that we are talking about a high in gold somewhere around the middle of the cycle, which means till about 2015. So 2015 should be a top, normalized top on gold, which means that we have another 5 years for gold to rise, maybe more. And from there, somewhere around 2017-18, gold should top, and then it should fall again. So the idea of cyclicality of gold can be studied when you look at history of the 30-year gold cycle. Then we have the uh, uh, repeating past mistakes. If you look at